Hey, welcome everybody. Thanks for joining us for another week from Maxi. We're reviewing the markets again like we always do. And this week we're going to dive straight in with the cooling off of the crazy run up that we've seen on Apple this past week. We have the chart pulled up already here, but Apple has seen a pretty amazing run. Right after we got our bull print from the Maxsi Trading Buddy indicator there, we saw about a 47% increase in the spot price of the stock. And then just at the end of last week, as you can see here circled, we did get our bear print kind of indicating the end of this run. And so, I want to start talking today about Apple and it's that move. And so what we had done in our Discord, we were trading some Apple shares. At the end of the week, we saw the indication, we saw the start of the close here, and we did scale out of those positions as well as a lot of the other short sell positions that we were following. So if you checked out our video last week, we were talking about how we had been playing some of the short squeezes that have been littered across the market. And a lot of that we were saying was on the tail end of, the bullish sentiment returning, but the institution money kind of lagging behind that bullish flip. And so a lot of institution money short selling, creating a lot of little short squeeze opportunities for us. And then this last week, the end of the week was starting to end in kind of a bearish indicator, but we really see it strongly here on Apple. So what we've done. Go for it.
Yeah. So it looks like from a chart perspective, like we basically, and this was the daily chart with Apple with our Maxsi Trading Buddy indicator. That's our custom indicator that we're using. Mm-hmm. So you can see we got a bull signal with the green band flip. So when you get a bull signal with the green band, it just means that you have a bullish trend confirmation. And we got this in early 2023. It looks like it.
Yeah, it looks like mid-January.
And Apple has just been on a tear. Like it's made new highs, and you can see how it kept bouncing on the indicator strength band.
Yeah, each of the days where it sold off, it never did tell us it was a bear flip, so it never printed bear. And then you can see that the strength band there, the green line, has acted as our support, which is exactly what we want to see in an uptrend. So this is very easy trading on this one. And
yeah, it's just like you don't need any like strategies or like advanced like technical analysis or anything. You can just, the indicator is like so simple to use. It works on anything, right?
Yeah, and then once we saw it closing down below that line and getting that bear, time to start scaling out.
So last week we saw a bear signal. We still need the band to flip red, but that's probably going to happen soon. But yeah, it was just like a very bearish close.
Yeah, and so it's our first indication of the flip here is that bear print without the red flip, but we are already 47% in profit. So it's a great way for us to start being like, this is a good place to take profit. So
exactly, and scale out.
Yeah.
So it's all about scaling in and scaling out. That's what you do with trading, and so I think, it's natural for something that's run up so much to cool off, and I think that's what Apple is going to do. It's going to, we'll just have to see how low it goes before finding support. And once we get the bull signal again, then it's like,
time to scale back in. Yeah, again. Exactly.
It's as simple as that. So like, and I think, and so also, they had the earnings call last week, which didn't help.
Didn't help too much. It wasn't a terrible earnings call, but some of the analysts are taking the information from the earnings call, which was, the phone sales were, I think, 2% above projections, but general sale revenue is down around 1%. Not like a end of days type earnings call that should, justify a huge market trend flip, but rather the first indication to analysts that the revenue income for Apple is slowing down, and the projection of those analysts is that in the upcoming earnings calls for the next earnings calls, they expect that revenue decline to continue. And so part of that expectation is helping to drive this price action a little bit more bearish and kind of, start to cool off this run. But of course, if we look at, Apple had made new all-time highs this past few weeks. So when that happens, when that happens and you see it pump beyond the previous peak, you should be expecting a bit of a cool off. And here you can actually, this is actually really nice. So here's the daily chart where we got our initial print. So we're being, getting our early warnings here to start scaling out. And then here we can see on the weekly chart, that weekly close there is pretty bearish. And then you can see
that's bearish, and it's just going to cool off and maybe like retest one of these supports.
Exactly.
So
and if we can bounce on that green band on the weekly chart, then absolutely the weekly trend is still very much bullish. But what we're looking at here was the daily chart.
172 around there.
Yeah. And then so meaning on the daily chart and in the shorter time frames here. So in this coming week, we are expecting a bit of a sell-off. So the move that we are participating in and that we're sharing within our Discord is to scale out, to take some of these profits from this run up off the table and then look for a new entry price at a better spot. We're not actually advocating short selling Apple because that's we don't hate money, and Apple is one of the big tech blue chips.
I mean, it's long-term bullish, but like, again, you can short sell on the short term.
That's true.
And basically because I mean, you just play the trend. So you're like, because we have had really good profit going long and just like 47%. So you could like short sell a little bit and then wait for the trend to flip. And then once we get a bull signal again, close your short and just long again.
And we have actually,
like really
as a collective here within our chats, we have actually taken positions short now at the end of the week. But rather than taking a single asset short, like short selling the Apple stock, we've taken short positions on the indexes. So so
like if this is the S&P 500, the ticker is SPY that you can trade. And looking at that here on the left side, so here we got a bear signal right on top. This is the 4-hour chart again, slower time frame, but you can see how like prices just been on a downtrend since then. And looking at the weekly, that's a bearish candle. That's a bearish engulfing candle.
Pretty damn bearish. Yeah, and you can see that the wick is shorter than the previous candle's wick as well. Quite a bit of bearish indications there.
So like, I think the SPY, it closed bearish. Apple also closed bearish. I think a lot of the indexes like SPY and QQQ are still like Apple makes up a lot of these indexes. So like if Apple can potentially like drag the whole market down,
exactly.
And
the whole market is looking like it wants to cool off too. So by
exactly. Which like, and also like, so we did buy some SPXS and SQQ. These are ETFs that act like 3x shorts of the main indexes.
Yeah, exactly.
That is, if you don't want to directly short it.
Exactly.
We can also directly short it, but like people who aren't familiar with shorting, you can like buy these indexes.
Yeah, exactly. Generally speaking, short selling involves taking a loan of shares of something, selling the shares, and then buying the shares back later to satisfy the loan. And doing that is, I mean, I made it sound very simple in my explanation just now, but doing that is not super. It's not super straightforward. You do need to manage the margins. There's quite a bit of volatility that can affect the margins that you're using, and it can be quite difficult. And so, like Sid was saying, for traders who are a little less comfortable, opening and maintaining their own short sells, there are these ETFs, which is just exchange traded funds. So they're just stock tickers that you can buy directly in your Robinhood or your TD Ameritrade or your Fidelity, wherever you buy your shares. So you would just type in, like SQQQ is the stock ticker, for example, or here we're looking at the SPSX, or this is just the SPY. But if you pull up those stock tickers,
SPXS.
So like for the QQQ is the NASDAQ index, the SPY is the S&P 500. And so SPXS is a ETF that offers you 3 times inverse exposure to the SPY. And SQQQ is the same thing, but for the NASDAQ. So 3 times inverse exposure to the NASDAQ index. And just so that's perfectly clear, what that means is if the NASDAQ index drops 1%, the SQQQ ETF in theory will raise 3%. So you're getting the inverse performance times 3.
Exactly. And you can see the QQQ. This is a QQQ chart too. For the Nasdaq, that closed bearish too.
Yeah.
Exactly like the S&P 500. So we did buy some SQQQ to short it, and also another thing that reinforces the idea that we might see a pullback is the DXY, which is
our old friend,
US
the DXY.
dollar.
Yes, we always like to pick at this.
Old friend. We talked about this last week and the week before that too, and we talked about how we see that it's in a channel, a downward channel, and we did correctly call for the DXY to go up, and when it like bounced at the bottom of the channel, and the last 3 weeks it's closed bullish.
Yeah,
and I think it still has a little more room to maybe run up a little more. So
yeah, test the top of the channel.
To recap,
that seems very realistic.
Maybe retest the top of the channel. That's where also the strength band.
We'll find a lot of resistance there.
Our indicator. Yeah, exactly. So it'll be interesting to see if it like taps this and again like falls back to stay within the channel, or if it closes above and then flips to bull, then stocks and crypto are in really big trouble, because to recap, like whenever the US dollar, or the ticker is DXY, when it goes up, stocks, equities, and crypto tend to move the other way, or they're going to have a pullback. And that's what's happened actually the past few weeks, and that's what we've seen.
Yeah, and it's still, like, you can see the SRSI down below, still smack in the middle there of the sweet spot. Plenty of room in both directions, but you can see the blue line leading the orange line, so the momentum is still up for this one. And just
exactly, so it has room to like run up, and here has room to run up. So that's why we also took some like short positions for the coming week. And our guess is that the DXY is going to run up, and stocks and crypto too is probably going to like go down a little bit. I mean, let me take out some of the lines so it's easier. It just closed. We got a bearish close on the weekly. That's not like, this is support right here, and Bitcoin like closed below it. Yeah. And let's take out some of the, just to make things clearer. So it's still in this
rising
wedge. At the monthly chart, it's still on that like rising wedge, which is bearish. Even on the weekly, it kind of, you can still see the same like rising wedge, and it also closed below support. So like, and you can see the starch like, basically curling down. Yeah. Which indicates that we're probably gonna like see the next the next week also, and
continue the bear trend there. I agree. Yeah. And then if we lose the wedge, then I imagine we'll retest that strength band to find hopefully support and bounce there. But if we lose that, then it's again, possible to retest previous lows. So not out of the woods yet, especially with crypto. A little bit less of a bearish sentiment, but absolutely the short term is looking bearish on the stock market as well. And so, for our members who participate in our Discord, we've been trading pretty actively. Even the last week, we've been trading long quite a few stocks, but individual stocks that were, in a short squeeze. And we did really well doing that, even though the general market is moving down. But at the end of the week, it was like, okay, let's dial back on this. Let's take a more leveraged approach here at the indexes, and potentially, short sell them and wait for this to kind of cool off. Collect a little bit of earnings on the way down, because you can easily do that. And then once the markets are cooled off, we can reassess and trade back in. So a big thing that I've seen in investing circles that I really disagree with is people who say you haven't made a loss until you've sold, or, like losses are only like legitimate when they're realized. I very much don't subscribe to that. I think that's a great way to bag hold into oblivion. And I don't think there's
especially in a in a bear market or a downtrend.
Yeah, and there's no
I
shame.
think, like, buying the dip,
Like
it only works in a bull market.
there's no shame in selling even at a slight loss, and then having the trend reverse and you buy back in again at a slight loss versus just bag holding all the way down. Like there is.
Yeah, like like Bitcoin is a nice example. Like, see, we got a bear signal here, like right on top.
Yeah.
And with the band change red, and then you can see like price keeps retesting.
Yeah.
But all these times, if people like kept buying, they would have been a huge loss. Like,
yeah. Oh yeah.
Like 70% or whatever.
Huge.
60 something. Yeah. But each of these, but if you had just waited and seen the trend flip back to bull and then
started buying the dip,
you'd be up massively.
Yeah, exactly. And so that's
what we did. Yeah.
And that's what we do that, and then we also share that kind of with everybody in the Discords.
Discord.
And it's been a lot of fun.
Yeah, it's like so if you guys want to learn more, like check our website out and like sign up. So like once you sign up with Maxi, you not just the indicator that is like very useful, that you can trade anything with this, like stocks, crypto, I don't know, ETFs, it doesn't matter, you can trade anything, and which makes it so easy for you, visually so easy. Bull means buy, bear means sell or short. It's very simple. So apart from the indicator, we also have our exclusive Discord. We call it the Maxiverse, and there in Discord we share like live updates of news, of all our trades. If we see any chart looking interesting,
and developments in the space,
we share all of that, and you can see like some of the profits that we made. We can see like it's been really amazing, and these are just like trading stocks, like like the members made 18,600 for the week.
That's in 1 week. Yeah. And that's only and that's 100%. We're just following the calls that we're posting in real time into Discord, and kind of moving along. It's
these short squeezes that we were talking about, like 85% and 90%.
That was literally an hour after we opened that position too. The Tupperware one, TUP. We were posting in the Discord. We're like, okay, Tupperware looks like it's cooled off. The squeeze is likely going to resume. So we're entering a position. I think like 4 or 5 members in the Discord like chimed in like, yep, I'm joining. Yep, I loaded my bags. And then the market closed and after hours trading started, and the stuff jumped like 40%, like almost immediately in after hours. And then by the end of after hours trading, it was up like 90%, like in your screenshot there, 80, 85%. And we had literally loaded those bags like 2 hours before this. So
exactly, right before takeoff. And we just like use the indicator, and like that's how we like trade it. It's like that simple.
And then part of it, and then we have the crypto stuff that we're looking at here, right? So part of it is also,
so we had some, so Bitcoin is gonna like probably pull back next week along with like equities, because the dollar is gonna run up. But last week we had some interesting things with crypto. So as the first thing is like, you want to talk about the base swap?
Let's do that one first. That's a little bit of a higher note. I like that one too. So for starters, let me get a little context here. Sid and I have been like active in these crypto markets for the better part of a decade, and I've been really a fan of like decentralized finance and participating in these markets. So I am well versed and like understand what's happening. I keep kind of like my finger on the pulse when it comes to new developments, and so I like to, as part of what I do in our Discord, to the people who are interested in participating in these crypto projects, I will post new development stuff that's coming up. And so here Sid actually pulled up on the screen here on what is it, the 1st, so that was about 5 days ago. I made a post here about crypto.com, sorry, Coinbase, which is the biggest centralized exchange platform by volume in the United States and in the Western kind of world of crypto trading, where Binance, I would say, is the biggest player in the entire world, but that's an Eastern-based one. I think they're based out of Singapore. So for traders in the United States, which is the overwhelming majority of our members as well, who's, jurisdictions remain in the United States. We always advise,
because Coinbase is regulated too.
It trades on the New York Stock Exchange now too, as Coin, I think, is their ticker. So in order to be listed on the stock exchange, they do have to adhere to quite a few like strict financial policies. They aren't like a fly by night, insolvent kind of operation. So what they've been basically, and what we recommend people do if you live in a country that is outside of the USA, we would recommend that you engage with cryptocurrency exchanges that operate and are headquartered in your country's jurisdiction. That way, if there is a problem, like your funds are locked for some reason, or there is a withdrawal or some type of dispute, you actually have a legal recourse because it's operating in your legal jurisdiction. It would be very difficult for you to, sue Binance in Singapore if they stole your funds. And there's chat rooms with hundreds of people complaining about their funds being locked, their accounts being, blocked or like frozen without explanation, and them having a hard time getting in touch with anybody or getting the ball rolling on that resolution process just because they don't really have any jurisdiction. So again, Coinbase, major exchange in the United States, and they have been working on and are launching their own blockchain, which is itself a layer 2 to the Ethereum network. It's a roll-up built on top of the Optimism stack, which is developed, and it's an open source development built by MIT, and it has certain licensing agreements, but it's all open source. And so they've licensed the OP stack, and they are deploying their own blockchain, calling it Base Chain. And that will actually launch this coming week on the 9th. So that is on, I believe, Tuesday. If I'm correct right there. So it's very, very soon.
Today is the 6th, in a few days.
So when that launches, what that means is that, Coinbase users, they can use an app on the phone. The app can include like the Coinbase DeFi wallet, it's called, which is like a self-custodial wallet where the owner of the application, meaning like the end user, so you, if you're using it, you control the private keys. Coinbase no longer owns the assets. You are the sole custodian of them within this wallet. But starting on the 9th, they will allow these, their DeFi wallet to access this Base blockchain. And the Base blockchain, being a layer 2 on Ethereum, is basically going to give those users access to most of the Ethereum protocols that, will have deployed onto the Base chain. And it'll make interacting with them much, much cheaper than interacting with any Ethereum mainnet thing. So it's basically a way for Coinbase users to get into the DeFi environment in a reasonable way. And so I obviously pay attention to this kind of thing. I was aware of it, that it's launching, but I also obviously I was aware of that as a, even though it's not publicly available yet, you can actually access this blockchain currently on the currently operating mainnet through these developer bridges. And there is new protocols coming out on them. Most everything that had come out before like the first, so before literally almost everything had rug pulled, where either it was exploited or the founders of these tokens had pulled the liquidity to steal people's money basically. And almost nothing that came out on Coinbase chain so far has been a legitimate project. But me being the kind of finger on the pulse person in the space that I am, I knew about this Base swap, the one that I just had posted there that Sid had shared the screenshot of. So I knew that this chain, this protocol was being deployed on Base by a development team that I have been aware of for multiple months and have followed. And they are very legitimate people. They are KYC'd, meaning like their identities is doxed. People, so it's not just some code being deployed. Exactly. Just some nonsense where it's like you have no follow through. You don't know who's behind this. So I knew all of this stuff before it was deployed, and this protocol went live on the 1st. And I shared this within our Discord where I said, hey, basically here in this thing where I said like, hey, everything's been kind of a scam in this space so far, but this is a team that I'm familiar with. And I believe that, participating in this product is going to have, what did I say here? Massive day zero yields and a large upside.
I mean, you did mention it's risky, but it's also risky. The yields might be like really good.
Really
so, like,
really
you
solid.
Did warn people too, because it did also get like rug pulled and stuff. There were projects.
There
on
was
it.
a lot of projects have been rug
A
pulled.
lot of stuff, but
Yeah.
but the main protocol, you had, it's solid. And
Yeah,
it's like
exactly.
you had faith in this, and that's why you shared
And
this.
I wouldn't push anything
ahead
like
of
this.
time.
Yeah, I wouldn't share this with people within our Discord if it was just some like fly by night thing. But this was something I was comfortable enough to be like, hey, anybody who has the risk tolerance and would like to try like a crypto, project. This is Founders Day. The pre-sale was happening. You could buy these tokens for 90 cents. And I was like, I think 90 cents is not a bad deal.
Look at where.
And here we are 6 days later. The token is trading at, this morning it was $6. It's about $5.
Oh, so it's even above this now. So how much did you?
Yeah, so
how much did you make on this?
It was a low.
Was it 4x?
It was a high risk thing. So I did $500,
100%?
and I ended up I put it into the liquidity pool, which was paying the yields that I was talking about in that post, and that's what I was saying. I like this strategy, so that's why I was recommending people participate in. And this morning I pulled out $575 of the $500 I initially supplied back into stablecoin, into cash. This was just I could have done a lot more, and in retrospect I feel like I should have, but of course risk tolerance and risk management is a part of this equation. So I pulled out $575. That's about 15% profit realized and principal recovered, and I still have about $1,600 left in the liquidity pool. So I'm still about three times what I started with, exposed to the upside still. And I don't think this is done. Like I said, we're filming this right now. It's the 6th. On the 9th, the proverbial floodgates will open, and the access to these applications will be much more simple for Coinbase users and people who are maybe not as DeFi savvy and know how to onboard into these chains through like the development bridges and all that stuff. But that again, that's part of the value that you get as a member in our chat. Anybody who, when I posted this stuff, was like, hey, this sounds like up my alley, but I don't know what I'm doing. That's where we would then one-on-one, I could walk you through exactly what to do, show you exactly how to participate and to basically build a position and how to manage it. And so that's part of our goal for the crypto side of what we do, is to not do this for you, but give you the tools to do it for yourself, because that's the point here. This is DeFi, this is crypto. The whole point is ownership. And if you want to delegate your ownership to me, you might as well just do that at like Merrill Lynch or like some stock investing broker. Yeah, someone like they'll do it, and they got a fiduciary license. They got a lot more. Like what I'm trying to do is I would like you to know what you can do, because at the end of the day, in these crypto markets, you and I can do exactly the same thing that the biggest hedge fund at Fidelity has access to, which
exactly, or even better, because
exactly, because it's your money. You're not tied to your investors' risk tolerances. Exactly.
You don't have all those rules, and then you don't have and you're completely in control. And it's the same with even with stock trading, that's why we have our indicator, and I'm the returns that you've seen 80% on a stock just
spot trading,
no options, no nothing. It's just stock trading, plain stuff. I mean, there's no hedge fund out there which would get you those returns. I think you can do it for yourself. Just
spot trading stocks on this past week, I think I was up about 9.8% for it's just this week in my stock portfolio. The previous week I was up, I think net, 11,
which is insane. It's crazy, and that's the thing. We want to show you how to do it for yourself and educate you, and you have all the tools.
Exactly.
And we have the indicator that we give you, and a lot of the stuff. So that's also part of the value, and also Max was saying, we also share stuff news wise. Before news is out there, so you can make timely moves, and
we did that.
Going
this
back to
here
something,
it is.
This is something that we're seeing happen. This is potentially something
almost live. This is basically a reliable situation. I would say this is a reliable rumor. And what we're looking at here, and the reason we've shared it also, you can see on the Discord, it's being shared in our news and info hub. So this is a place where we share relevant developments in either the stock or the crypto space, stuff that we are interested in and that we know our members are participating in. If there's something that comes across our desk, we will push it forward here. And so this is an example of that, where basically this is a due diligence that's been posted by a relatively reliable source on Twitter, who is looking at the exodus of USDT, which is the Tether stablecoin, from the Huobi exchange and from the Binance exchange over the last several days, and then is kind of drawing connections between the Huobi exchanges on the blockchain, on the known wallets that are owned by the Huobi exchange. We're looking at the reserve of crypto that they hold, comparing that to what they owe to their clients. And he's basically pointing at some pretty massive holes where it looks like, with on-chain data available here, that the Huobi exchange only has about a quarter of the actual assets to back the debts that they hold on behalf of their customers. And tokens that have been introduced through the Huobi exchange, such as ST-USDT, which is a staked tether, which is a asset that was launched by the exchange. And the way that they bill it is that you deposit your USDT, and in exchange you get ST-USDT. And the selling point is that the USDT you deposit gets turned into actual cash, and then the actual cash is used to purchase bonds, like U.S. Treasury bonds. I believe 9-month bonds or maybe 12-month bonds, but it's about a 4.56% APY on those bonds. And so that this ST-USDT should then earn, 4.56%. And this due diligence is showing that the USDT that is on-chain deposited into those staking contracts is not actually being redeemed for cash. And so it's hard to to draw a line at this is actually backed by cash. And it looks like there's quite a bit of foul play going on. This is very similar to what happened at the FTX before the big FTX, Sam Bankman-Fried collapse there. And honestly, at the time the SBF stuff happened, we also shared this type of stuff within our Discord. And I believe it was 2 days before they halted withdrawals. We shared the rumors of insolvency, and we, not just the rumors, but we also shared the advice: get your money off of this platform before it's too late. And people did get their money out literally in the nick of time. And so this is a similar example of that. We're sharing this now. And the advice that comes with it is get your money off of Huobi and de-risk or de-expose yourself to the USDT stablecoin. Since the Tether stablecoin is potentially, going to need to be massively sold in order to make up for this insolvency. And these institutions like Huobi and Justin Sun is the owner, heavy
he
involved.
Also owns Poloniex. He also
Tron chain.
He basically made a lot of money with the Tron coin. If you guys were
that's
back in
TRX.
2017. Yeah, TRX.
Yeah.
So
so
he's
he's
a lot of let's say Fugazi.
Yeah, he's a well-known kind of not directly a scammer, but he's a very well-known figure in crypto, and he's always kind of scam adjacent. So personally, while I'm not going to stand here and try to besmirch him and say he's a scammer directly, I would say that he's around when scams happen. In a way that's a little suspicious. Maybe it's not foul play. It's obviously he's around in crypto in general. So there's a lot of scams. It doesn't necessarily mean he's there, but I am cautious, and we are urging caution with this.
Yeah, I think for us, is what we do for our members is that basically try to help them, and one part is a huge part is risk management. Yeah, and we were talking about trading and stuff. So it's the same thing when FTX went down. Who knows? This could still be just a rumor. They might be fine. We don't have actual. We can't pull their financial document out.
But right now, you can pull your money off the exchange.
Yeah, exactly. So right now, what you can do is you can still take your money out. Be safe.
There is not a deep peg. The value hasn't
better
lost.
Safe than sorry.
Exactly.
As they say,
Exactly. It's your money at the end of the day. risk management, like I said earlier, is a big part of this equation. And so even some of our members who, when we brought this news up, quite a few of our members, again, Huobi is an exchange based in the East. Most of our members are here in the United States or in the West, and are not necessarily using Huobi. And so
I personally am not.
I don't
never have.
exactly. I don't either. But here's the kicker. We need to understand the interconnectivity of the nature of decentralized finance. And so if Huobi does, prove to be insolvent, and they do have this massive, run on the remaining assets, and they need to sell all this tether basically to get back some cash. If there is a liquidity crunch on the USDT token, this tether coin, the stable coin, that coin is deeply, deeply rooted, like very intricately woven into the decentralized finance system. It represents a major...
It'll affect the whole market, yeah.
Exactly. It represents a major portion of the stablecoin liquidity in general. A big part of the curve pool, the 3 CRV pool, that's the main stablecoin pool in DeFi, is USDT. It's a big aspect of money market protocols like Compound, like AAVE. So even if you're not directly using Huobi, you might hold assets that use protocols that are tied into this USDT asset. So like, for example, if you hold... let's say you hold Origin USD, so that's OUSD. That's like a stable coin that it generates revenue while you hold it. Or also USD Plus. It's another example of a similar thing. USD Plus is issued by Overnight Finance, and Origin USD is Origin Protocol, which I believe that's a company that's at least co-owned by the co-founder of PayPal. So it's a big one, but the way that it makes revenue is by supplying stablecoin liquidity to Curve, and again, Curve is heavily exposed to USDT. So you might think, like USDT and Huobi and all this stuff is not stuff I use. I hold OUSD or I hold USD Plus. USD Plus uses Overnight Finance to manage their positions, and most of a good portion of their money is in the AAVE money market, which again, if the collateral that is lent out against USDT from this money market, and the USDT becomes, insolvent and loses its peg value to $1, then that collateral backing, loses its value and the debt becomes bad, and that affects the other assets in the money market. So all of this interconnectivity, is not necessarily something people are aware of on the surface, but is also something we like to help people understand when it's like, hey, here's what the news is, but here's the wider reaching implication of this news to the rest of this crypto market. So we'll have to keep an eye on this as it develops. This is definitely
so we'll have to
big
keep
story.
an eye. Like to recap, we, the stocks, crypto, they look bearish for the coming week, and we'll have to see how the whole market does.
Exactly. So this coming week, we have offloaded a few of our shares. We're looking at some short ETFs, the SPXS and the SQQQ, and we'll see how those do. And then, of course, we're excited to watch the Coinbase blockchain launch on the 9th. And we are very, very eagerly going to be monitoring this Huobi exchange solvency rumor. And, we're going to maintain, obviously, when Monday starts and more people actually check their emails and stuff, we'll push out another alert to be like, hey, if you are exposed to these assets, de-expose yourself.
And also I think like the CPI, PPI,
that's right, Thursday.
Some of the inflation reports are coming out next week, so we'll have to see how the numbers do and if it does affect the market. So
exactly.
Stay tuned.
So we got some big stuff brewing, but we always, as always, our Trading Buddy indicator is kind of our compass in this market, and we have already gotten the signal that it's time to kind of scale out a little bit, and so we've already started scaling out at the end of last week. So we'll keep you guys posted, and if you want to join in on some of these moves, join our Discord community to be pinged with all this kind of information, or even to just have access to like a one-on-one guided tour of building a decentralized finance position, or maybe taking a trade position, or doing some kind of options play, or maybe a futures contract trading thing. We are exactly there to help for those things. When people join the Discord and they're like, hey, I'm interested in this, that's exactly what it's for. So if that's something that is up your alley or something you're interested in, we'd love to see you join up. Come find us over at maxi.io. And of course, the first month is free, so you can try it all risk-free and see if it's something that's for you. Pretty confident that once you get into the chat and into like using our tools and stuff, you'll see the value and you'll be excited to stick around and join the conversation. But as always, it's no risk, so feel free to try it, and we'll be excited to see you there. Until next time, we'll see how this next week plays out. I feel like there's quite a few big things brewing here, so I think next week we'll be able to check in on these and see what happens.